What's going on, guys? It's your boy Tyler, bringing you technical analysis for the week of 6 March 2023. We're looking at nasdaq. From what I'm seeing, nasdaq is going to 1300s, but before that we have to, of course, get to 12,000. So I don't know if you guys know, but this week we have NFP. So this is one of the busiest weeks in the markets right now. So we see a continuation pattern with nasdaq and the US indices. When you're looking at it from a 15-minute chart, we see a pattern forming like that, what's called a descending channel. We're waiting for price to break above the blue band, and then we go long. Our stop loss will be at 320, and we'll take profits at 370. But if we break to the lower band, we can expect price to go to 12,218. That's if we break below 300, 12,300. Can expect price to go to 2,218. But from what I'm seeing, I'm still bullish. I'm still bullish on the major trend. But the market hasn't retraced in a while. So there's also a possibility that we might hit 373, and then it's going to retrace to 218. So let's look at the fundamentals. What are they saying about the fundamentals? Dollar slips as investors await Powell testimony. So guys, what they're saying here is the dollar slips, meaning it's falling. It was currently at 104. It's headed down to 101. So let's read what they say. Dollar slips as investors await Powell testimony. The US dollar was broadly lower on Monday as investors awaited testimony from Federal Reserve Chairman Jerome Powell and looked towards a February jobs report at the end of the week that will likely influence how hawkish the US central bank will be. The dollar index, which measures the US currency against 6 major pairs, was 0.182% lower at 104.42. The index last week clocked a weekly loss for the first time since January, after delivering jumbo hikes last year. The Fed has raised interest rates by 25 basis points in its latest two meetings, but a slew of resilient economic data has stoked market fears the central bank might return to its aggressive path. Futures imply a 72% chance the Fed will raise rates by 25 basis points at its meeting on the March of 2022. The spotlight will be firmly on the February jobs report scheduled for this Friday and Fed Chair Jerome Powell's testimony to Congress on Tuesday and Wednesday. U.S. underlying inflation remains stubbornly high, well above the Fed's inflation target of 2%, said Joseph Corposo, head of International and Sustainable Economics at Commonwealth Bank of Australia. Recent data suggests consumer spending is not slowing much, while the labor market is unsustainably tight. He also said in a note, adding, Powell will likely be hawkish in his testimony. City strategists expect Powell to indicate a preference for a 25 basis point hike but leave all options on the table since he will speak before the jobs data are released. City expects an increase in payrolls of 255,000 following January's enormous 517 jump. A large surprise on the upside could lead to a 50 basis point hike for the Fed. Meanwhile, the Euro USD was up 0.07% to $1 and 0.0641, having gained 0.8% last week, while sterling was last trading at $1.2029, down 0.09 on the day. The Japanese yen strengthened 0.10 to 135 per dollar ahead of the final policy meeting on Friday for Bank of Japan Governor Kuroda. If Kuroda ends his term with a very dovish tone, that could spell trouble for yen, especially if US yields continue their run higher this week. Elsewhere, China's yuan weakened on Monday, a day after the country set a modest target for 2023 economic growth of around 5%. In the spot market, the onshore yuan, USD Chinese yuan, opened at $6.9272 per dollar and was last changing hands at $6.91. In cryptocurrencies, Bitcoin rose 0.53% to 22,363, having fallen 5% on Friday. Ethereum last fell 0.2% to 1,559. Australian dollar fell 0.21 to 675 cents, while the Kiwi was last at 621, down 0.16%. As you guys can see, we have a mixed report. Dollars coming down, euro dollar was up, but British pound was up when it was supposed to be. No, I mean the pound was down. They say sterling was last trading at $1.20, down 0.09% on the day. It was down on Friday when it was supposed to be up if the dollar is going to be weak. So I would recommend we trade after the news release.